Hey guys, today's Sunday, February the 18th of 2024, and I wanted to go over natural gas. This is going to be a short video. I want to go over the statistical calendar. I wanted to take my time with that, but I want to throw in there as a bonus something I was observing this morning on natural gas. So let's start off with our Gann square. As you can see, there's not much support down here. If it gets all the way down there, over here, you can see that it broke this angle right here. So that's not exciting. So this angle didn't hold. It's right now below it. From another support, you can see that right here, obviously, is that 144, 147. This is going to be support as of now. If it gets down there, that's the only support I see. And also, yeah, pretty much. But there's nothing in regards to the angles or 1/8 or 1/6 level here anywhere. It's pretty much this 144, 147. And then this angle right here that we pierced. If we could regain it, it'd be nice. But if it's going to be below there, that's pretty much what the chart is telling us. Going into neural net on the computer, it was saying about 213 and swing point of 418. I know there's two models I'm running. One says the 19th. This one was the 13th. So let's see how this is going to play out. But this is what is projection, what it's calculating that could possibly play out in the future. All right. So what I wanted to show you before I do the statistical calendar is this thing called similarities. And what similarity is looking at price action from the past and see if there's anything that has any correlation with the current price action that we have now. And this one has no filters. It's pretty much just kind of looking at price action. So far, this one is very doom and gloom. I don't like that one. Here's another one with no filters, just a price action by itself. And here's a third one, just pretty much, downward trend. Now we could put a filter. We could look at similar years. And now things get a little interesting. This is not that bad. Somewhere around here, March, get this pop to April, which kind of makes sense. But it's still going down. Now this one is interesting. This is 2013. So in 2013, just kind of assimilating the price from the past. 2013 here. This could be very possible because this matches the April, strong April. What could cause this? Catalyst wise, I don't know. Some news event, something, I don't know. But we're just using probability and just, analyzing things, probability. If this play out, this could be nice. That's that 2013 price action there. This one looks like it's inverse. It peaked on 2018 and this one goes down. So could it be an inverse play? We don't know. But from 4-2, which is assuming then now is going to be an inverse going down, not a strong upper April, then it starts rallying. Here's 1998. You can see that right here around 229, 27, around there. It gets this nice pop. Remember this is February 26th. So we'll see if this plays out here. I could keep going on, but I don't want to bore you to death. And here's another one. It's kind of chopping around sideways, and somewhere around the 21st, it explode. Are we gonna get this? I don't know. That'd be nice. I know a lot of people are long from higher prices. It would be nice, get everybody out and get everybody in profit. We're in a winning situation. And then as the last one will be the filter of month, similar months within the year. So now we're focusing on February right here. You can see it's highlighted. And somewhere around here, it makes a low on March the 7th. around there. And then it gets this nice little pop into like April, kind of that April strength, seasonality wise. Yeah, this one's nice. The 16th low here, and then from here, just a nice rally. This one is 2018. Yeah, that's the 2018 price action. Let's see, maybe one more. This one continues grinding lower. This one's nice. March the 3rd, around there, first week. Goes a little further, goes into May. Oh, look at this one. What's that? The 26. Ooh, the famous 26 I've been watching. Can you see? Yep, 26. And this one rallies all the way to like May 2nd, around there. April 3rd, May 2nd. Anyway, just wanted to show you that. Let's go to the statistical calendar now. And this is what I wanted to show you guys. The statistical calendar is not something you just trade your base. You base your trades on. First thing 101 is the times. You ignore all these times. This has nothing to do with time. This has nothing to do with time. So don't think, oh, 9 o'clock, I got to go bearish. No. This is something default from the Apple calendar that has to put time there, obviously, because people use it to schedule their events. I use it more like, what the days are. So ignore the times, nothing about times. There is bullish trading days, which is these right here. So bullish trading day is that Monday on the 19th. The probabilities are high. They could be a bullish day, 0.73%. On Tuesday, probabilities are high on trading day that it's bearish, minus 1.08%. So you get the idea, right? So looking at this week, I know it's President's Day. And I know I'm assuming they closed, early in the afternoon. But Monday's going to be bullish for natural gas, whatever that means. Tuesday, very bearish. Wednesday, very bearish. Not very bearish, but bearish. This is the most bearish day. This is minus 1.08%. Thursday's bearish. And then Friday is bullish. But not by much. They kind of, minus 0.23%. Then we have weekdays. So weekdays are factoring in all the Mondays. So typically analyzing that, all the Mondays are bearish. Tuesday is bullish, but not by much, as you can see. 0.0196% is not that much. It's kind of flat, but just leaning slightly bullish. Wednesday is bearish, and Thursday is very bearish, and Friday is bearish. So Fridays are typically bearish. Thursdays are very bearish, just Thursdays. I guess it's something to do maybe the reports that come out, and has to do with this month that it's just ugly. That's my guess. Wednesdays are bearish, weekdays. And Tuesday's the only one that has a slight little bump up, but it's not by much. It's almost kind of flat, but it's just green. And then lastly, I put dollar signs on days that you probably would make the most money. These 2 days, they don't have any dollar sign because it's not really that relevant. But Wednesday, if you go short, typically you can make some money. It's just 2. 3, this is the biggest down day. And Monday is the biggest up day. So these two are pretty much even. You can make money on the upside, but then it's going to reverse and go down. And then all with saying all that is we're dealing with probability. This is not guaranteed. Sometimes none of this stuff plays out. I went long. It was Wednesday because it has statistical calendar saying it was going to be up, and you know what? It pushed lower and stopped me out. It didn't play out. So this is the thing. You just have to keep that in mind, that this is not like always going to work out. Sometimes it works out. Some days, one day may work out, and all of these, could be all duds. Prices could continue going higher and this not play out, which would be nice, but it is what it is. So I just wanted to put that there. So now you know what are the trading days. They're bearish, bullish, weekdays, and then you can see that sometimes they match together, like these two are you got trading day that's bearish and you got weekday that's bearish. Oops, I don't want to do that. And you got bearish day with a positive weekday, so they're mixed. So that's going to happen. That's typical. So things are not all going to all line up. And lastly, we have average return by month, which is negative. So this month, like we know, February is a down month. It's a weak month. No matter what's going on, it's just a weak month. And we know that April is a strong month, seasonality-wise. So the average return by month is negative, obviously, because prices are going down. Now, what's interesting is the average return by week, which is this week only, is positive. So you have a lot of things that are not connected, but giving you some data points. So this week, statistically, is positive. Average return by week, by this week only. Next week will be different. Average return by month is negative. So since February started, it's just been a down cycle. And we've been seeing that. It's been reflecting that in regards to price. And then within that component, you have Monday, Tuesday, Wednesday, Thursday, Friday trading days. These are specific to these days only. And then you have weekday data. What happens typically on Monday? What happens typically on all the Tuesdays of February? What happens typically on all the Wednesdays? All the Thursdays? All the Fridays? So you start seeing a pattern. Okay, so Thursdays are always pretty negative, pretty ugly. And there could be some kind of report that comes out. And since we know that February is a negative month, obviously these reports influence a lot. So Thursday, you have to just be careful about going long if there's some report coming out that could affect us, So those are the little things you have to think about. So I'll leave it there. I don't want to make this video too long, but this is a good explanation of the statistical calendar. And above all things, the time is not relevant. Remember that. I don't want you to get confused that I'm thinking, you got to go long 9 a.m., 10 a.m., and at lunchtime when it's, when it's slow and chop, you're going to go bearish or whatever. Forget about the time. Forget about it. Forget about the times. I think that should make it very clear. I'm going to use this video just in case somebody asks me, hey, what is the statistical calendar? How I use that? And then on top of that, with all this information, you got to use it with your trading style. Whatever your signals, whatever your rules you use to go long, to go short, if this matches up with your thesis that, I want to go short, Thursday, and everything is going good. Like I'll give you a tip. If you're below the VWAP and below the midpoint for Thursday, the 22nd, and this is showing that, it's a down there. You got trading day and you got weekday that's negative, and you got a report that's coming out and it's negative, then, you could be leaning down if everything is lining up. just remember to place your stops just in case, you know, it reverses and takes everybody out. Stops are very important. All right, I'm going to sign out. Have a great weekday on Sunday. And let's see how we open Sunday. It'll be interesting to see. I was looking at a lot of stuff on February the 19th, some other Gann theory, and there is some kind of correlation on the 19th. I don't want to say too much because it might spook some of you, but I want to see how this open is going to happen. It's going to be very interesting. At least the 19, 20, 21. I just want to see those 3 days. If we could start, let's say the 157 is right here. If we could start moving away from this 157 starting tomorrow, that's very positive. I'm just going to tell you that. So our 157 low is right here. If we just start chopping around and just kind of grinding, just moving away slowly, that is very key. But it needs to happen on the 19th and also the 26th. Big cluster day you got to keep on your radar, whatever is going to happen Monday. So very important day, 19. And the next most important day will be the 26th. Have a great day, and I'll keep you posted on my thoughts on that gas.